Hey, welcome back to The Dive. The Federal Reserve signaled it will reduce its massive bond holdings at a maximum pace of $95 billion a month. And our guest today will share his thoughts on how high rates could go, as well as how he thinks investors should be positioning themselves in the current macro front. His read on energy stocks, Tesla, Twitter, Robinhood, and of course, we won't let him go without Bitcoin. He is the president and chief market strategist of InTheMoneyStocks.com and VerifiedInvestingCrypto.com, and one of our regulars here at The Dive. Gareth Soloway is joining us today. But before we bring Gareth on, do me one quick favor and go ahead and just tap that subscribe button so we can keep making you these videos. Hey Gareth, welcome back to The Dive.
Hey, thanks for having me back. Great to be here.
Thank you so much for joining us. Okay, so the Federal Reserve signaled that it will reduce its massive bond holdings at a maximum pace of $60 billion in treasuries and $35 billion in mortgage-backed securities monthly. How much of this do you think is already priced in, and how much higher do you think that rates can go?
Yeah, that's a good question. So we've definitely seen the market selling off over the last week or so. And I think the market was caught a little bit off guard by that announcement when we got it last week during the Fed minutes. So I think it's being priced in currently. The question is, how much do these kind of things that the Fed is doing, whether it's cutting down their balance sheet, raising rates, or even ending QE, how much does that slow the economy? And that's my big question, is that, right now the markets are saying, okay, well, we have to live in a higher interest rate environment. But I don't think the markets are fully factoring in that when you raise rates or lower the balance sheet, which is the same as raising rates, you actually slow the economy down. And then you have to start thinking about, okay, well, then do profit margins start to slip? Do sales start to slip? Does earnings growth start to slip? And that's where you could get another big leg down in the stock market later this year, if that turns out to be true.
So, Gareth, given everything that's happening on the macro front, how do you think that investors should be positioning themselves? Are you net short?
Yeah, so I think you have to be in this environment much more of a nimble trader. And again, that's not something that everyone can do, nor is it something that everyone is good at. But really, this is a market where if you can't trade the market, I would be mostly in cash, maybe in some gold right now, only in select quality names, maybe pick some blue chips and have some good dividend paying stocks like that in your portfolio. But aside from that, if you're kind of interested in these high-tech growth stocks and you can't be a trader, then I would sit on the sidelines because I expect them to go lower. Now, in all fairness, I did inch into Zoom today. Zoom has had a big drop here just from, the recent highs pulling back. Teladoc. But again, keep in mind, I'm a trader. So if they bounce 10%, I'm going to be out very, very quickly. A lot of people can't do that. But certainly over the course of this year, I expect the stock market to go quite a bit lower still.
Mm-hmm. Okay, so let's shift gears to energy stocks here. They have already rallied 38% year to date, and some banks see additional upside ahead as the sector represents the 2022 pain trade. What is your read on energy stocks?
Yeah, so I am bearish on energy stocks. I was more bearish when they were higher more recently. We've seen a big decline in oil. Spot crude, I think, getting down to like $96 a barrel. Actually, right now trading at $94 a barrel. So, we were at this 130 level and everyone was screaming for $200 a barrel. And I just couldn't get my head around that. Like, why on earth would we go to $200 a barrel when the pain at the pump was causing people to drive a lot less, right? So you have this driving less, flying less. All of these scenarios lower the demand. They make people stop traveling. And that's going to bring the price of oil back down. In addition, the Federal Reserve is raising interest rates. That's going to slow the economy, brings demand of oil down. And then you have to think about the midterm elections in the US coming up. And the Democrats certainly want to do their best to win seats. They have to bring that oil price down. So all of the metrics, even when people were calling for $200 a barrel, were telling me oil was going to come lower. I still have a downside target of $85 a barrel here over the next month or two. So I expect it to continue to head down. I think oil stocks will head down with it.
Now, we recently saw you tweeting about Tesla. Some say that its new Austin Gigafactory will change the EV production game. How are you viewing Tesla's chart right now?
Yeah, so I was short Tesla. I have moved out of that short just because it's fallen so much from the 1150 level down to sub 1000 at this point. Again, that's a trader's mentality where if it bounces sharply, I'll look to short it again. But I'm still in the camp where, you look at something like Tesla and it's in a remarkable company. Elon Musk is a remarkable individual. But again, at some point in time, valuation does matter. And what you find is that in bear markets, valuation actually matters the most. All right. When you're in a bull market and the Fed is flooding the market with liquidity, you can have any valuation. And we saw that on Tesla. We saw it on GameStop. We saw it on AMC and all these different stocks out there. But now we're entering a new phase of the market. And I do believe that ultimately it has to come down to at least only an elevated PE ratio where again, I don't think it's going to go back to normal because there's always going to be a level that Elon Musk commands in terms of a premium. But I do think it's headed down, probably down to about $500 in the next 12 months.
Mm-hmm. So speaking of Elon, could you also share your analysis on Twitter's chart?
Yeah, sure. Let's take a look at Twitter's chart here. So Twitter, we know that Elon, bought in almost a 10% stake. We also know that he was going to be on the board of directors. Then it came out today that he is not going to be on the board of directors. It certainly sounds to me like there was probably some fighting going on back and forth. And ultimately he decided, or the board decided, to not accept him on there because it would be too conflicting for the company. Now, the stock itself had a big run on that news, right? Huge run here. It is starting to fade back down here. Interestingly enough, if I throw up my 200 moving average, you can see that right at that level, it went up to on that news. It was right into the 200 moving average. For me, what I would do as an investor, I think it's a positive to have Elon Musk invested. There's always a chance that he would think about buying more shares, which would be a catalyst, but I certainly wouldn't be buying until it fills this gap. Gaps on charts are there's a term I use, and it says gaps are made to be filled. You don't know when, but as long as there's a big gap lurking from this point to where it gapped up and you've now come down to this far, I would strongly encourage investors to think about waiting to enter until you get down to this $40 range. Once at 40, then I think it makes a lot of sense, especially with Elon Musk in the trade at this point.
Okay, so Robinhood is also down after Goldman Sachs downgraded the stock to sell from neutral. They said that it's due to continued weakness in the account growth and a limited path to near-term profitability. How closely are you following Hood?
Yeah, so definitely keeping an eye on it. We've traded it a little bit, but very quickly in and out. I think the stock, again, is struggling, right? You remember when Robinhood made its big move? It was when the markets were always going up and these smaller stocks were just ripping, the AMCs, the GameStops, the Wall Street Bets crowd. We've now seen this turn in the stock market where a lot of these stocks are down 50, 60, 70% off of their highs. And that makes it very tricky for Robinhood to attract more investors or more money from those investors when they're already getting hit on current trades that they're stuck in. So again, I kind of think that, at a valuation level, it probably does have a little bit more to go. On a pure technical basis, what we can look at is that if you really want to be aggressive with Robinhood, you can buy it at this $10 level, which it's getting very close to. You can see here it bounced, and it started that low with this reversal. So you do have a level to trade against. And the reason why this is a positive is that, let's say you go in at $11, which is just a little lower than here. It's above the $10 level. What you can do is you just keep a mental or physical stop below $10, and you're risking about 10%. If you get a big move up, you could easily head back to 16, which would be a great gain, almost 50% upside on the stock. So again, while I think it's ultimately going down, if you're a nimble trader, you could kind of play this and limit your downside risk by just making sure you stop out if it does break that key level.
Mm-hmm. Okay, so let's move on and talk about Bitcoin. ARK Invest CEO Cathie Wood recently gave a $1 million price target for Bitcoin by 2030, saying it's a great hedge against inflation. We have to ask, do you think this is a realistic long-term?
So long-term, yes. But again, long-term is a very, gray area, right? I mean, is long-term a year, is long-term 3 years, 5 years, 10 years? I would say 10 years, right? And I think she probably thinks a lot sooner. I would argue with her and say right now it is not a place to hide in terms of inflation because it's still a risk asset. In fact, you can see how this recent decline in Bitcoin right here, if you go to your NASDAQ 100 chart, and I can flip over to that quickly, it's mirroring the NASDAQ 100, the QQQ, right? So you can see the Qs, and I have all these trading lines on here, but look at the down move there, and then look at what Bitcoin has done here. So again, the Bitcoin, it's important for investors to understand is that long-term, yes, as it matures, it will become more like a digital gold, which is a great place to kind of offset the risk of inflation, but it hasn't gotten to that maturity level yet. And again, really when you look at this chart, and I've said this before, but you have to look at this chart and understand that this pattern formation here, this down move with this sideways consolidation is actually what we call a bear flag in the industry. And that means that ultimately the probabilities favor a sharp move lower at some point. It might not be for months, but at some point, this lower trend line right here will break, and likely you will see a big move down. I still have a target of sub 20 to sub 20,000 on Bitcoin before I start really looking at it as a value play in terms of a gold investment.
Mm-hmm. Now, are there any other trade ideas you're excited about or charts that we haven't touched on that you'd like to?
Yeah, I mean, I think it's worth just keeping an eye on certain names that again have been really hammered recently. And again, these are just trading ideas; they're not long-term trades. But something like this Teladoc. Teladoc had this amazing move from about $50 all the way up to about almost $80. It's now come back in nicely to about 66. I think you start looking at these type of plays that are down. I mean, if you look at where this thing topped out as a short-term trade, I can almost see an inverse head and shoulders here, right? So let me draw that in so everyone can view it. But you could argue that this right here is an inverse head and shoulder. And if it breaks out above this neckline, which it hasn't done yet, but this point would be your breakout, this could at least go back maybe to the 200 in the near term, even if down the line there's more downside or at least a pullback in it. So I think a stock like Teladoc is getting interesting. Some of these other beaten down techs at these levels that have pulled back are interesting. I would even say that, something like an Alibaba, which, had this monstrous rally, has now consolidated. And this looks to me like a kind of a bull flag formation. This could be setting up for a near-term move as well.
Okay, great. Well, thank you so much for coming on today and sharing your expertise with us, Gareth. Before we let you go, where can our audience go to get more of your commentary?
Wonderful. The best place, and thank you for having me. It's always such a pleasure. But the best place to go is Twitter, at Gareth Soloway on Twitter. And then if you're more interested in my trade signals that I actually put out with an exact entry and exit, then for stocks, inthemoneystocks.com, and for crypto, verifiedinvestingcrypto.com.
Perfect. Thank you, Gareth. We'll see you next time.
Thank you.
Thanks so much for watching today. We'll be back again tomorrow with the latest news and updates. So be sure to follow along by hitting that notification bell before you go.